Ladies and gentlemen, a very warm welcome to you on Business Today Television. The market's flat a day ahead of the monthly expiry, only to be expected, except for this very sharp bounce that's happening in the IT sector. The Nifty sort of reflecting, consolidating after a fairly decent run-up in the month of November, especially in the last fortnight or so. More so, the weakness percolating from the Wall Street, from Asian markets, and the fact that there is a bit of, how should I say, discomfort as far as valuations are concerned. Remember last week, Nifty hit a record high, and from then on, it's been a sideways trend as far as markets are concerned. To discuss this and a lot more, we are now joined by Mr. Sudeep Bandopadhyay, the top man at Inditrade Capital. Namaste to you, Sudeep ji, and as always, a warm welcome to you, sir. How are you sort of interpreting sentiment on the Lal Street at this point of time? Is this a period of reflection, consolidation? What lies ahead?
Inviting me. Yes, it's a period of consolidation, undoubtedly. And we do believe that there is something called anti-AI trade, which is becoming popular. And in anti-AI trade, Indian IT companies gain momentum. And that's exactly what is happening. Whenever there is concern regarding valuation of AI-driven stocks, I think investors, particularly FIIs, are looking at technology stocks which are not driven by AI mania. And Indian IT fits in beautifully there. That's pretty much the reason for Indian IT to move up as things stand today. Overall, I think India is in a good position. Macro factors in India look good. The domestic inflows are there. There are expectations of a lot of spending during the current wedding, festive, and basically Q3 and Q4 of the current fiscal, which should lead to rapid economic growth and improvement in GDP numbers. So I think hopefully we are in a good period of growth, and probably this will give the valuations an opportunity to catch up with the fundamentals.
Okay. There's an interesting thought you mentioned, the anti-AI trade. For the lack of a better word, I think the trade missed India. We've seen very sharp rallies in the Taiwanese markets, Hong Kong, Chinese markets, not to mention Wall Street and Nasdaq in particular. But we missed the trade completely because there was no direct play. At this point of time, Sudeep ji, against the record low of a rupee, do you think there is this chance for foreign friends to come back into the markets, given that the Indo-US trade deal is only days away, if not hours away?
Shalji, you're absolutely right. I think FII return in a big way to a great extent depends on what happens on the Indo-US trade deal. Look, fundamentally, we don't believe that it will change anything drastically. I think as far as Indian markets are concerned, a lot of it is already factored in. We are assuming, as far as the market is concerned, market is assuming that a reasonable trade deal is already done and it's moving on. However, as far as sentiment is concerned, particularly of the FII crowd, I think the sentiment will significantly turn positive once the trade deal is in place. Now, there are still a lot of ifs and buts. There are views that very strongly believe, like you mentioned, the trade deal is around the corner. Again, there are views which are putting the trade deal little on the back burner. It's not going to happen immediately. That's what a lot of views are coming across. So we'll have to wait and watch. But as far as FIIs are concerned, a trade deal happening will trigger the inflows and will take the Indian market to a slightly different level, positive side.
Okay, fair point. Now, with this macro picture in our background, Sudeep ji, share with us what is the research team of Inditrade talking to its ultra Chennai clients. So far, we've seen this rally on the market being largely blue chip led. We haven't seen any, acrobatics in the mid cap, small cap space, but stocks like Mahindra and Mahindra, SBI, Bharti Airtel, L&T, these have been the star performers over the last fortnight or so, if not a little longer. What is your gut feel about mids and smalls, and what is the research team now working upon?
Well, I think one theme which we have been liking quite a bit, and we have been talking about it, is that the valuation gap between PSU banks and private sector banks as well as NBFCs. If you look at some of the NBFC and private sector banks, they are quoting at a valuation multiple of 5 to 6 times of their book. Whereas if you look at even the best, largest bank, which is State Bank of India, it is quoting at 1.1 time book. So there is a significant valuation gap, and that
absolutely,
and that somewhere will get to an extent bridged. I'm not saying that it will become equal or something like that, but this kind of valuation gap is little unwarranted, and somewhere the market will work towards bridging this gap. The second point which is important here is that the government and the authorities are talking about a second round of merger, second or third round, whichever way you want to interpret, of smaller PSU banks with the larger banks to create conglomerates which can take on the world as far as banking and financial services are concerned. This is definitely good news. Now the question of when it will happen, who will merge with whom, and what kind of bank will get created, this is all in the realm of speculation. But the fact that this is being looked at is definitely positive from smaller PSU bank perspective. Again, remember the logic that their valuation is significantly cheap compared to similar sized private sector banks or NBFCs is some factor which needs to be kept in mind. I saw the ticker, I saw the screen showing Bank of Maharashtra, fantastic bank in the public sector. All parameters great, but valuation still significantly lower compared to peers in the private sector. So there is definitely an opportunity of valuation pickup as far as PSU banks are concerned, and smaller PSU banks also in particular.
I agree with you wholeheartedly as you describe State Bank of India and also the valuations in the rungs below as far as the PSU banking sector is concerned. It's a no-brainer there. Sudeep ji, how are you analyzing the IT space given the fact that the global IT trade, the global AI trade sort of took the wind out of the sales of domestic IT, and it floundered really, really low. Now aided with buybacks, aided with valuations, good balance sheets, crores in cash on bank accounts and debt-free status. How is this sector looking to you?
Well, the way I look at Indian IT, I am very cautious on Indian IT. Let's put it upfront. I think Indian IT is going to have a challenging time. Now, leave aside this currency depreciation, which benefits their P&L directly and things like that. These are very, very temporary phenomenon, and these are not fundamentals to the business. Fundamentals to the business are changing, and Indian IT companies are suffering because of that. Now, where is the global market going? Global market is looking at artificial intelligence in a big way for delivery of service to large corporates. Now, unfortunately, Indian IT companies have been left behind in the race. They don't have their own AI products. So they have to use third-party AI product to deliver services going forward, which will definitely lead to dent in their margins. Also, expectation for large corporates world over is use of AI will help them manage costs better. So again, pressure on margin for Indian IT companies. Third and most important factor as things stand today, in spite of whatever we say as far as US economy is concerned, US large corporates are still very, very cautious. The kind of policy making flip-flops which is happening in US is leading to all the large corporates to be extremely cautious on, I should say, non-business, non-critical spends. And IT development comes, unfortunately, amongst that. the projects are not getting green lighted. The sizes of the projects are being cut. Whatever is not absolutely critical is being postponed. Now, this doesn't augur well for Indian IT companies. So, under the circumstances, we believe that Indian IT companies will have pressure on margin, and their revenue growth also will be capped somewhere in single digits and maybe low single digits to mid single digits. So, this is not good news for Indian IT companies at this stage. However, having said that, there are IT companies catering to niche areas in the market. Now, let's take off travel and tourism. Now, this travel and tourism world over is going through a massive positive phase and massive growth. So, IT companies catering to travel and tourism will continue to do well and have been doing well. So, Ecoforge, RateGain Technologies, and many other IT companies which have got a significant component of their business coming from travel and tourism will do well in the short to medium term. As far as let's say automobile, there is a transition happening from ICE to EV. Now, there are a lot of IT companies and Indian IT companies also who are facilitating this transition, participating in this transition. So, whether it's Persistence Systems, whether it's Tata Technologies, and many others. Now, they will have a fantastic business opportunity in the short to medium term. So, if you are looking at IT, my suggestion will be pick up IT aligned with sectors which are growing rapidly or where there is significant scope. Don't go for general IT or, maybe for lack of better word, large cap IT companies which are, a conglomerate and providing multiple services where there are a lot of challenges.
Okay, so don't go for generic IT companies, look for sector-specific thematic IT plays which have a global playground in terms of sectoral tailwinds such as tourism. That's understandable. Sudeep ji, now let's look at the part of the market where, money is not going into. Defense is not attracting fresh money. There is nothing much happening on the pharma space. Some of the realty sectors are quiet, doing nothing at all. What is and small caps and mid caps in this sector have been taken to the cleaners. What is your advice to people who have large exposure to mid caps and little or no blue chips in their portfolio? What should they do?
Well, as far as defense is concerned, I think the valuation have been extremely rich. So I think at some stage, people are realizing that the valuation and the fundamentals, there is a significant gap, and it will take some time before the fundamentals catch up with the valuation. So fresh money is not moving in a big way as far as defense is concerned. From an investor point of view, if you have invested in a good defense stock with a great potential, and the order flow is continuing, there is absolutely no worry. You remain invested. Yes, it will take some time before valuation catches up with fundamentals, but there's no harm in remaining invested because that sector will do well. That is fundamentally very clear. The only challenge is the valuation. As far as pharma is concerned, I think there is volatility, there are uncertainties, particularly because of the tariff and related shenanigans of the US administration. But the fact remains that there are pockets in healthcare or overall pharma healthcare space which is doing exceedingly well, and I would definitely request investors to focus on domestic focused healthcare themes. So pharma companies catering to domestic markets. So I'll give you an example. Mankind Pharma, 95% of their business in India. Now there's no problem. Domestic pharma is growing at 25% CAGR. So why not look at that? Or companies like that. Look at the hospital space. I think there is tremendous growth, tremendous consolidation, and a humongous amount of foreign capital which is flowing into Indian hospital space, and their opportunity is still, I think, we are just scratching the surface. We still need many good hospitals across the country, in every nook and corner, to cater to the needs of growing India. So hospital definitely needs a look, and whether you look at the biggest one, Apollo Hospital, or you look at small niche player like a Medanta, I think all of them do look good from a long-term perspective. So that's as far as overall healthcare pharma is concerned. As far as real estate is concerned, again, my view is the valuation. If you have picked up a stock which is doing good and has great potential, yeah, even if the valuation is a little off today, hang on for long term. We believe that we are in a positive real estate cycle. Probably we are in the midst of, somewhere in the middle of a real estate positive cycle. So maybe it has got still some tailwind for it to go for the next 4 or 5 years. So a temporary lull should not deter you or make you exit the stock. Remain invested. However, if you have picked up some, company which is not fundamentally good and not doing well, then I would say you better exit and move into some sectors or companies which have a potential of providing better returns.
Oh, fair point. That's very well explained. Within the liquidity flow, Sudeep ji, how are you looking at the rupee? Is the worst behind the rupee? Do you see some appreciation in the coming months?
Well, there is no doubt of the fact that the rupee is under pressure. But for the RBI intervention, last week the rupee was probably going to touch 90. RBI intervention ensured that it doesn't go above 89.50. As far as rupee is concerned, my view is that if the US trade deal happens, FII flows will start moving in a big way into India, and rupee will get support and probably start appreciating also. So I think to a great extent, indirectly, it depends on US-India trade deal. If it happens, and as most speculation indicates that it's going to happen very soon, I think we will see rupee appreciate in the short term.
Okay. When you look at the macro positioning of India's balance sheet, any pain points you see?
Well, not directly immediately, but there can be a pain point. If US-India trade deal doesn't happen and we remain at this kind of 50% tariff for 50% of India's exports to US, because the rest is exempt, there will be a dent in our GDP number, irrespective of whatever estimate you look at. India's GDP will take a hit, whether it's 0.5%, 1%, we can speculate and debate, but there will be a dent. So we need the US-India trade deal because US has been our largest trading partner, and we would like to have that trade deal. Of course, we don't need to compromise on our sovereignty, India, and our interests, and that should not be done. But US-India trade deal is in the interest of everybody. Let's hope it happens. If it doesn't, then we'll have a little bit of a challenge as far as GDP and growth is concerned.
On balance, Sudeep ji, what do you think is the tilt of the market? Is it moving higher from 26,200? Of course, with the the requisite dips, or are we looking at maybe some kind of a sell-off?
I'm positive, Shailji. I think we are definitely the bias of the market is positive. If the trade deal comes, you will see market immediately moving up and touching new all-time highs. We are very close to that anyway, and market will see a lot more FII money coming in. Remember, FII holding in Indian market is at its probably lowest point as things stand today, multi-decadal low, and FII money will move in a big way, and that itself will change the kind of color of the market, and the market will move to a different level. So I'm positive on the market. Even if the trade deal, there are some challenges, we know domestic liquidity, and that is what has been sustaining the market for a very long time now. That will continue unabated. Indian macro factors, as we were discussing, the inflation is low, interest rates have come down, the rainfall has been plentiful, rural consumption has picked up. We are most probably getting into a season where consumption demand is going to pick up, both urban as well as rural. leading to good corporate performance in Q3 as well as Q4. Even Q2 performance was much better than what the market was expecting. So I think things are falling in place. Yes, valuations are not cheap, were not cheap, and probably will never be cheap as far as India is concerned, because we are a market which is giving growth which is better than most other markets. So Indian valuations will never be cheap, but they are becoming more and more reasonable with passage of time and improvement of corporate performance.
Right. A final set of questions, Sudeep ji. Silver and gold have deflated many of fund managers' performance on the equity side in 2025. Still, a lot of money flowing into ETFs globally for these two precious metals. What's the prognosis from now on? More gains, or are we looking at flattening out of the gains?
Well, I think the kind of sharp rise in gold which we have seen in the last few months, I don't think we are going to see that in 2026. However, if we are assuming that gold will suddenly start crashing, or silver will start crashing in a big way, I don't think that's going to happen. The reasons are as follows. As far as gold is concerned, there is significant amount of buying happening in gold apart from consumption demand by the central banks across the world, and that is providing a bottom for the gold, and gold will not come below a certain level, and buying by central banks world over will continue. This ensures that the gold doesn't come below a certain level. As far as silver is concerned, beyond everything else, and beyond the buying by retail as well as for investment purposes, industrial use of silver is also increasing because of the high-end gadgets and things like that. So the industrial use of silver provides that bottom as far as silver is concerned. So I don't think silver also will crash or something drastic will happen in silver. However, to expect the kind of return we received in gold and silver in the past few months, it will be unrealistic. It will be reasonably good returns.
Okay. Would you allocate fresh money to silver and gold?
Well, everybody's portfolio, a certain portion should be in gold, silver. There is no doubt about it, and I'm not talking about physical gold, physical silver. It should be in some kind of gold or silver instrument, either ETF, or maybe you can play this through multi-asset allocation fund, started by multiple mutual funds in this country, whereby they take certain exposure in gold and silver.
Fair point. With that, Sudeep ji, one final question. Today we've lost one of the greatest film stars to have graced Bollywood, which is Dharmendra Deol. Any memories that you would want to share of your youth watching his movies out of college, maybe liking some of his songs, anything that catches your fancy as far as Dharmendra is concerned?
Well, of course, Sholay is so big in Indian memory generally. Whenever you think of Dharmendra and you think of antics of Viru, Jay and Viru, I think it's amazing. I mean, that will always remain etched. Apart from that, other multiple movies, including Chupke Chupke, and some of the roles which Dharmendra ji had played during his long, illustrious career is memorable, and I think we will always cherish the memories. We will all wish his soul rest in peace, and my condolences to the bereaved family.
Right. On that slightly somber note, we'll call it time, Sudeep ji. As always, it's such a pleasure to listen to you, and we hope to meet soon in Mumbai in the latter part of the coming month. Thank you so much for your time, sir.
Thank you.
That, ladies and gentlemen, was Mr. Sudeep Bandopadhyay, Group Chairman at Inditrade Capital. Continue watching Business Today Television. There's a lot that's happening on the other side of the break.